Ladies and gentlemen. Thank you for inviting me to present to your trustees and principal officers. Yes, I'm as Kumbulani mentioned. Thank you, Kumbulani. My name is Keonethebe Bosigo, and I'm a portfolio manager for the Africa Fund at Mazi Asset Management. Today, I'll be talking about Africa, a continent of opportunity. These are the contents that I'll be covering. Plenty of opportunities on the continent, how to access those opportunities, and the fact that Africa investments or Africa investments deserve or have a place in a diversified South African Balance Fund. And I'll do a bit of marketing on the Mazi Africa Equity Fund. Africa. Opportunities galore. Continent of opportunity. Africa is alive with potential and opportunities. We believe that the investment opportunity across the continent lies within 4 key themes, and these themes will be the major drivers of growth across the continent and presents a significant opportunities for an astute investor, where we seek to uncover these opportunities for the benefit of our clients. These key themes are diversity of Africa, its people, financial services, and the infrastructure. And one has to be selective, of course, due to the diverse nature of the countries and the political regimes. Diversity. Africa is not a simple place, ladies and gentlemen. African countries, they can be described by their differences and nuance, rather than their uniformity. We have 50 countries, over 2,000 languages and cultures. It is large and diverse to offer investors a wide variety of opportunities from the oil-producing West to the agricultural East. The countries tend to be poorly understood and underrepresented. Political environments have been improving, and this is key to unlocking the continent's potential going into the future. The African consumer. African people are its most valuable resource. It has 1.4 billion people, which is a significant consumer market. Demographics play a significant role. The average age of an African is 19 years old, which is half of those of Europeans and Asians and some American countries. Yes, we do agree these people need to be educated. These people need proper functioning healthcare to be productive. But we believe that in the next 50 years, Africa will provide the next Elon Musk, the next innovators, the next leaders of the world, and leaders of companies. Real GDP growth will be supportive of penetration, formalization, and premiumization within the consumer sector. Companies that can provide locally relevant products that are focused on the local tastes and trends will be the main beneficiaries of this trend. This young population needs access to financial services, which remains a key challenge for most of the African countries. Yes, for the past 10, 15 years, mobile network operators have been able to provide or bring basic financial services to those previously excluded from the formal system. Technology companies have also been instrumental in increasing the penetration, but the opportunity set is still abound. There are few countries in Africa, for example, where mortgage market exists. I mean, we're talking South Africa. In Southern Africa, we're talking Namibia, currently in Botswana, one of the markets that has a functioning mortgage markets, probably in Morocco in North Africa. The rest of the continent, that doesn't exist. Basically, if you want to buy a house, you have to buy it cash. If you have to buy a car, unless you're an ultra-wealthy person, you have to buy it cash. So access to credit markets is very limited, which provides present and significant investment opportunity. Infrastructure. Africa suffers from significant infrastructure deficit, and this deficit across all sectors. We've spoken about education, we spoke about healthcare, energy, and transport. The World Bank estimates that the continent will require between 130 to 170 billion dollars spending annually to address this deficit. While on the slides, just some nuances, with the advent of technology today, we have food deliveries, we have the Amazons of this world, grocery deliveries, and the entire e-commerce space. But spaces like that won't operate efficiently without a proper functioning infrastructure. We're talking about, if you think about what makes this industries that have popped out all over the world possible, like mobile network operators, functioning cell phone network, functioning roads. You won't be able to get your food in time if the roads are not working. You won't be able to get products that you order online on time if the rail network and the road infrastructure it's not working. So Africa needs this investments for it to be able to attain its fourth industrial revolution. How do we access these investment opportunities on the continent? There are traditional asset classes. Those in italics is the products that Mazi has to offer. The listed equity fund, which I manage, and we're in the process of launching a fixed income product. We also are in the process of launching an infrastructure fund and a private equity fund. Traditional asset classes are the easiest and the quickest way to access these investment themes on the continent. As I mentioned, these opportunities can be accessed through listed equity on various stock exchanges across the continent. There are challenges, of course, and risks that Randolph touched on at length, but those are not insurmountable. Fixed income, both Eurobonds and local currency debt, the best performing asset class in Africa yet. And if you saw Randolph's presentation from 2009, this asset class has actually outperformed even the ACWI, which is the MSCI Global Equity Index. Alternatives, concessions and private-public partnerships, have been the main drivers for investors on the continent. Most investors have been doing this, especially in the power space, not only in South Africa. We've seen this in other countries, like currently in Zambia. We were in Zambia last week, where we met with some of the companies that are involved in the space, in the power space, and water infrastructure also. The private sector is starting to get more and more involved on the public-private partnership space. Astute investors have made in the past good returns and will continue to do so going into the future. On the private equity side, the opportunities have been abound in most, especially in the fintech space. Valuations have come off the highs of 2021, but innovation has not slowed. There are challenges, yes, like exiting, the efficient way to exit investments, but some exit have happened, and innovation is coming in the space also, and how to exit some of this investment efficiently. All the economy assets are still extremely cheap on the continent, and here I'm talking about your traditional assets like manufacturing companies, banks, and other normal companies that we know. Private credit, still a niche asset class on the continent, but smart investors have taken a keen interest in putting money behind this asset class. So, risks. Traditional asset classes risk, liquidity, currency, and regulatory risks exist. But as you have mentioned, these risks are not insurmountable, and there are ways to manage them on the continent. As Warren Buffett said, it is not about avoiding risks. It's about managing them. Alternative assets risk also exists. Weak institutions on the continent, underdeveloped legal systems, and unenforceable contracts, land tenures, and property rights. As I mentioned also, these are improving. If you talk about institutions, institutions across the continent are improving. and they are being formalized and they are being strengthened. Legal systems are improving on the continent, and land tenure and property rights actually most governments are starting to take this seriously, and they are starting to implement. There is a place for Africa in a diversified SA portfolio. Firstly, Africa is a diversifier. African markets are not correlated, with the exception, of course, of the JSE, have very low correlation with the rest of the markets across the world, which present a significant opportunity for a diversified portfolio. The African markets are also cheap, especially the equity space. Developed markets valuations have expanded over the last 10 years, whilst Africa and other emerging markets have not kept pace. If you look at the table below there, we have current PEs and historical PEs, price to earnings ratios of America, the world, Japan, Europe, and the Pacific region. And as you can see there, Africa has the lowest multiple compared to all of them. Currently, it is both cheap relative to all the other markets and relative to its own history. And if you exclude Morocco out of the price to earnings ratio, is even low. And here we're talking about the current price to earnings ratio, not the forward. Most African markets, yes, suffer from lack of local investments and savings pools. There's still no mandatory pension contributions. In South Africa, this is regulatory. Once you get into formal employment, there's mandatory pension contributions and all the other employee benefits that you get. Most of this does not exist in Africa, mostly as a result of regulation. There's no mutual fund industry, lower income levels, and also just lack of regulatory framework. That means that there's no marginal buyer in the stock market. The market is, most of the time, is tightly held, owned by few insiders, and the rest of the float owned by foreigners. Hence, you've seen a lot of volatility in the last couple of years when foreigners were exiting Africa. Earnings and dividends. African companies have derated, as we have mentioned. The companies are very cheap, both relative to their own history and relative to the other markets across the world. That's because they have derated significantly over the past couple of years, despite decent earnings growth and significant dividend returns in some of the companies. If you look at the chart on the left, it shows that, I'll make an example, EKH Holdings, which is Egypt Kuwaiti Holdings, a company listed in Egypt, has, for the past 8 years, given you a compound annual growth rate earnings of just above 25%, yet the share price has only risen by less than 10% in US dollar terms for the past couple of years. On the right-hand side, just shows you the cumulative dividends paid by some of the African companies relative to their current share price, all in US dollars. Some of the companies, like the Egyptian bank, the Nigerian banks, have actually paid you, if you look at on the right-hand side of the scale, over 300% of their current share price back in dividends in the past 8 years. Which shows that it's not all doom and gloom on the continent, and that the companies on the continent has sometimes been sold off unnecessarily, despite strong fundamentals, underlying fundamentals. Just a bit of marketing on the Mazi Africa Equity Fund, just how we manage the fund. We focus on companies that generates 50% or more of their revenues, operating profit or cash flows within Africa. They can be listed anywhere else in the world. The market cap of about $150 million minimum. Of course, we can own companies that have a lower market cap if we believe that they've got a potential to be $150+ million market cap companies. We pay close attention to liquidity and the free float of the companies that we invest in. How we manage the risks. Election calendars is very important. They are having elections here in Botswana on the 30th of November. Namibia is having elections actually on the 27th. This might not be, our neighbors' significant elections in the context of our investment universe, but we do pay close attention to this. Whilst we're looking at the election calendar, some of the stuff that we look at is the economic policy of who's running or who's likely to win. What are the implications for growth? Balance of payments, which dives into the currency, foreign direct investments. How is the country's balance sheet look like for forex reserves? Mostly looking at the import coverage, external debt as a percentage of GDP. Very, very important when we're looking at the election calendar and the countries that we invest in. We also pay very close attention to liquidity, as Randolph has mentioned. African companies, or there are few African companies that trade at decent liquidity. This is just our current exposure on the continent. The fund is mostly exposed to Egypt and Kenya, and our key underweight is Morocco, and that's mostly because of the valuation. In conclusion, Africa is rising again. This time around, we believe towards the middle income status. Sorry. Favorable demographics, improving literacy levels, strong economic growth will result in rising income levels. The markets are cheap as a result of capital outflows, but also strong local corporate earnings. We believe that Africa offers significant investment opportunity for a patient investor. And we, as Mazi, are an African asset manager based in Africa, and we believe our unique position and understanding of the continent allows us to uncover and realize the continent's opportunities for the benefit of our clients. Thank you.